Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 0.5% there on the S&P. Nasdaq is slightly green today. Semiconductor is positive also, 1% there. Dow, Russell 2000, they're down about 1% today. Transport did get hit harder today along with the energy sector there. You know, transport down 2%, energy down 2.7%, banks down 1% there. Biotech is up 1.6% despite the fact that other sectors being red today. Biotech's been getting some good traction last month or so. And it's there getting, you know, retesting that all-time high level there. We got the healthcare down a little bit. Home builders down about 1%. Utilities pretty much flat. Retail did get hit, 2.8% negative. Emerging market up 0.5%. Bitcoin's up 4% today. Gold, silver, miners flat. Down. Miners got hit harder today. Dollars pretty much flat. Oil's down 3.4%. Treasury bond is flat and VIX is flat also. Let's stick with S&P. Spider 65-minute chart here. So a lot of shenanigans been going on here in the market in this week. So let me just kind of break it down real quick here. So you can see this gap up here. If anybody chased this gap up to the upside, well, a lot of times, you know, people place their stop just underneath it here. They would have gotten stopped out yesterday or, you know, yesterday morning or, you know, Monday at close. And then when this thing rallied up here yesterday, those people who got stopped out, they start FOMOing here, right? Fear of missing out, getting back in. And then when they opened, they saw, you know, they woke up and looked at the market. Market is down, you know, 0.5% or so at open. And then they're kind of freaking out here. And so you can see how when you're chasing market back and forth, this market is going to turn you around, bully around. And this been the story pretty much this entire year, right? This is making a lot of traders very, very aggravated because the market has not seen a smooth rallies. We've seen couple, right? Maybe 2 or 3 or so this entire year. It's been extremely, extremely difficult market for anybody trying to kind of, you know, capture that, you know, that smooth swing. Very, very difficult. I think only way to truly survive and thrive in this market to be a long-term investor and a position trader. Anyway, so we talked about this yesterday that, hey, at some point we're going to kind of retest that short-term moving average. Only thing about that short-term moving average is that short-term moving average has not seen any kind of traction. This is not, we're pretty much seeing that short-term moving average moving sideways. I would like to see that short-term moving average seeing that trajectory to the upside and then, you know, that price coming down, retesting it, using it as a support and, you know, prop itself up and cultivate that higher low. Right now, things are a little bit different because that short-term moving average just kind of sitting there, moving sideways, telling us that there hasn't been a real trend in the last several days. And we can see that there hasn't been any trend here. You can see that that's a 3 days or so of price action. You can see we just been, you know, down, up, down, up, down. So, but as far as the overall structure is concerned, looking at things short term, looking at just this week, you know, we have to, you know, say that we do have that higher high cultivation and potentially we're in the vicinity of higher low. We don't know that yet. You can see that that's low. And so we got the slight higher high. That's a low. We don't have higher low yet. So for what the bears want to do, kind of dismantle this, you know, to do that, we need to negate that potential higher low by coming back down and filling this gap here at 435. If the bears can do something like that, then there would be that lower low. And things are going to get much more hectic if we do see that kind of cultivation from the sellers. However, keep in mind that, you know, my secondary short-term moving average does have, you know, pretty nice resume. Nothing too impressive though, but, you know, you can see here, here, and here. It's a pretty nice, decent resume as of today. So that's something keep an eye on if we do see the price coming back down, losing that 438-ish level. Short term, my first short term moving average is residing at 438.50, just guarding that support level at 438.90. So that's the level to hold. You can see we did hold that level for a day or so back in last day of July. Could we see is this some sort of an inverted head and shoulder type of setup? Could be. We don't know yet as of today. Could be that's a left shoulder head, right shoulder. Only way to confirm that would be, we want to see this thing kind of getting back up here and then, getting above that neckline. If we see this here and ultimately has to make new all-time highs and cultivate another higher low, if we see something like that, then we can say that, hey, that was an inverted head and shoulders playing out and the market is ready to thrive and make new all-time highs. Right now, this down gap is going to make things hectic in the short term unless bears have opened this up, and it's only way it's gonna backfire for the bears if the bulls can get up tomorrow and maybe on Friday if they can gap it up, turn this into an island bottom and then make a move. If we see something like that, we'll get to 445 pretty quickly. So sometimes buyers will let bears do something like this, and then, next day or 2 days later, we'll just gap it over, kind of use that as a catalyst to kind of, make that move after getting these short-term traders to get stopped out and turn them around, bully them around a little bit, right? So overall though, I do want to give benefit of the doubt to the buyers as of today with the cultivation of this higher high, knowing that price is still staying above my short term here and my secondary short term moving average is rising. And with that, I do want to give benefit of the doubt to the buyers in the overall price action. Let's check out that oscillator and see if we can extract any more information. So I drew this oscillator resistance here. You can see that that's the resistance level. And so bulls should have brought it all the way up here, at least to this level, was not able to do it. And with that, we got these lower highs going on that oscillator. So the oscillator is kind of favoring the bears here a little bit with that cross, as you can see. You can see that cross right there. So last time when we crossed, we did see that downturn, and we are in that vicinity of lower highs here of that cultivation. And so what the bulls want to do is need to kind of, not come all the way back down here, but need to maybe, get back up. And there's a chance, bears might bring it up, and then we find support somewhere here. Let's put this here. There might be something. We might get stuck here. See who wins. Either this thing comes down and get back up, or this thing start coming right back down to the bottom of its span. Obviously, bears want to push it all the way down, and buyers want to bring it back up here. So I think the battleground is going to be for, the 440-ish all the way to 435, 436. This is going to be the battleground, right? Bears want to fill this up gap. Buyers want to fill this down gap. Best case scenario for the buyers though, gapping it over, turn this an island bottom. Bears, obviously you want to break below both of the short-term moving average at some point, fill this down gap, and then come back below 435. But I'm getting way too ahead of myself. Only way right now, as far as the structure is concerned, I think buyers are still, on top as of today, despite the fact that we are seeing some of these, the oscillator favoring the bears. Bears need to just bring it down. Maybe gap down will be the best case scenario. Just jumping below both of these moving average. Take no time and just fill this gap as quickly as possible. Because if you start to fizzle, if bears start to fizzle, bears start to kind of hang, if you let buyers hang around here sideways, you know bulls are going to bring it up. They already have some momentum here to some of these short-term moving averages rising higher. And keep in mind that this up gap held here, right? And so overall, I want to look at this as a consolidation pattern, and consolidation pattern is actually favors the buyers overall. So really what bears need to do, bears need to bring it down quickly. Don't let bulls hang around too long, because if you let bulls hang around too long, sooner or later bulls will bring it up. So let's see how the market plays out, right? So tomorrow action will be important, how the market is going to behave going into Friday and early next week. So I'll come back for you. Enjoy your evening and good luck trading tomorrow.